Okay, welcome again. Um, so there is another issue we wanted to talk about. Actually, the separation of the old economy and the old currency system from the cryptocurrency and the new economy, cryptocurrency world. The question is if that will happen and when and how long it will take, and if there is something like a tipping point to this. And I think we have been in the what many call the fiat currency system since 1913, effectively with the Federal Reserve Bank governors agreeing on a paper standard or in a paper currency in 1913, and transitioning from a gold standard that was in effect many centuries before that. I think paper currency developed just around before the French Revolution in Europe, and then in America it started more or less in the 20th century, beginning of 20th century. So we had this economic system and currency system since then, and increasingly we are going electronic. We had Visa cards and debit and credit cards, electronic money, and now we have cryptocurrency since 2009 at least. And the question would be if when you would see a definite transition into this new system, and if so.
Okay, so transitioning into a new system, if you look out throughout history, has always been through what I call almost like a 12 or a 30-year phase. Now. We got off the gold standard, I think, in the mid-'70s or 72 when Nixon...
that was the final thing.
Yes.
I mean, we got off it much earlier, but I think that was the last stage, probably. Yeah.
Right. And so we're dependent on paper since 72, but then if you travel now around, especially in Europe and most places, people are using these smart cards. Where you make instant payments. But you find that other countries don't use it or they're afraid of using it. I remember early in the 80s when credit card came through, I was so resistant in using credit cards. Now I use it all the time. So, we get so secure and comfortable with one currency that it's psychologically and our habits, our dependency on a medium of a currency is so habituated that it takes a while to get confidence to make that transition. But not only that, there has to be some validation in terms of some security. You see, for instance, when the credit cards came out in the beginning, there was a lot of scams. So people hear about the scams, and if people are a bit more cautious or risk averse, then they try to avoid it until there's some government security and stability. So in order for cryptocurrencies to become part of daily usage, there are two things that must happen. One is that there should be a mechanism where the government can collect taxes. Two, that there should be a legal system that would actually protect the general consumer in vis-a-vis the cryptocurrencies. So,
meaning that
when there's a scam, people are secure with their cryptos.
So basically, the government is the only entity being able to scam people, but no other people.
So,
it was before.
You could say that the governments can scam legally, and there's no way to take them to court. But then the problem is that if there are other scammers who, through using the electronic media, might just sort of steal away your cryptos because it's all in digital form now, that there should be some recourse where people can actually get their monies back one way or the other. Now, until those two systems are established, I think people will feel secure in using it on a daily basis. But until those two factors don't come into play, it will take a while to make it part of the general public daily usage. So, but then if we go back and look at things historically, you see that there were scammers throughout. I mean, even till today, they're credit card scams.
But
Maybe they're
they're
getting
insured
counter.
and yeah,
Exactly.
kind of. I think there is still a lot of credit card scams, and banks are getting hacked daily. But I think they manage to deal with it financially, and
Correct.
it's not in the media, basically.
Exactly. And so until there's that maturity level of every currency, once that maturity level of protection and governments can get their money somehow, then it becomes a viable means of daily transaction where people can feel secure for it. Now, if you look back historically, even with paper currency in the early 1900s, you see the paper currency developed primarily, I know it developed in Europe, but more so it really expanded in U.S. Because basically when all the gold came in from California, they would deposit those gold deposits in a bank in New York. The New York then would issue a paper currency as in lieu of the gold that was stored in the bank. And that's why till today, if you look at the US dollar, it says that this is a legal tender. It's not real money. You see?
Yeah, I mean, it's. I think there were also several banks or a lot of regional banks who could issue money back then in the 19th century, even.
Exactly, and that those papers were basically like modern day checks.
Oh.
Okay, so each bank offers its own check, and likewise, each money that way was offered by different states or different, and it is a tender. It's a legal tender, equivalent to the value of $10. So if you look at a $10 bill. It doesn't say it is a real $10 bill, although we take it to be $10 as a real thing. But the paper,
a promissory note.
It is a promissory note, and that's the difference because the real value is in the bank. So
it should be in the bank. No, it should. It was in the bank in the form of gold, at least.
That's right. So if you look at the psychology, even then, people would not trade in paper because it was just a paper, if somebody wrote. But over time, we gained security. We felt secure on using the dollar note. And once it got disconnected from the gold standard, we took it as a real value. Mm-hmm. So today, we hardly use cash. I mean, we do use in certain economies where the electronic systems are not, or the internet systems or the digital systems are not highly advanced. So we still use paper money. But then if you travel through Europe, for instance, or even most parts of the US, there are very few times that we use actual cash. I mean, we get paid in digital money. We hardly get paid in cash anymore. So, money gets transferred into our banks, we pay our bills from our banks, and all the transactions are done electronically. So what's the next stage? Cryptos becomes the natural next stage. But for it to be legal,
say something about money and currency, because I think that there's quite a fundamental difference. In the case that money is actually also a store of value, so there should be no inflation in money, and therefore before the cryptos like Bitcoin that is limited to 21 million coins, there was actually the last decades there was no store of value because you had to spend your money in order to make up for the depreciation. So I think that's one of the new things of cryptocurrency. It could be more money than currency in that sense.
Exactly. And so you find the values change depending on the demand and supply, of course. So in the olden days, before gold became a commodity, it had a fixed value. In fact, because it had a fixed value, you had the currencies tied in to the gold. Like for instance, until 1972, the dollar was $12 per an ounce of gold.
Yeah, because you couldn't print gold. No, you could only mine it, and very slowly. So
exactly. And so you see that changed. But then the real value of money, any form of money or currency, is based on demand and supply. This is total pure macroeconomics.
Well, not only, I believe, because the supply is the crucial point here. Because fiat dollars you can just print, and nobody really knows actually how many are around. I mean, there's different types of dollars that are issued, and most of them, I think, 70 to 90% are actually just exist in debt. They are not even created by the Fed. So
exactly, yeah.
So therefore, I think it's not only supply and demand, because the supply in this case is very shady and.
Well, but that's what governments, when they had to pay more, they would print money, and they could just print it because they had the authority to do it.
Yeah.
Now, when you come to cryptocurrencies, you don't. It takes that power away from these governments. So in that sense, you find that cryptos have more reliability and there's more confidence that it will generate over time. But the transition to change the entire financial system, the entire monetary system, to the cryptocurrencies actually that is applicable, it will take another 20, 30 years. I mean, usually it's a 30-year cycle. So we look at 2009. So if you add another 30 years, you will come to almost to 2039. So you'll find that by that time, we're looking at a whole different world. But because things are moving so rapidly right now, I would add 18 years, because that is another one significant cycle that happens. And so 2009 plus 18, so we're looking at 29, 30. So again, in another 15 years or so, or less than that actually, in 2080. So another 10 years, we'll look at a different monetary system that most international countries or people will be doing on a large scale. At the end of the day, when you go back to the original monetary system, like throughout history, you find that basically it was a barter.
Yeah.
You see, I had a value, you had a value, how do we trade? And that's how all trading began. Then it became hard, because now I question, okay, let's have something as a medium, something that would something that we can use, so that I use that as a symbol of value. And so that's how coins came into existence. And then we started collecting coins for the most time. If you look at the medieval times, most of the kingdoms would trade with coins, and that's how they started. Now the coins they had to actually print coins or manufacture coins based on the value of something substantial. So that's when we went into silver, and then eventually into gold. But then carrying gold around or silver around is not easy. So then we produced something that would replicate or represent. So right from the initial time, whether you look at the coins, gold coins or silver coins, or other traditions where, for instance, in the ancient times, people would use cows as a symbol of wealth.
It's a bit difficult to divide. No, if you want to just buy something small, you have to. I mean, they cut off steaks from cows in I think Ethiopia. But,
exactly. So exactly. So what you see in all of these is that we're looking for a symbol. The bottom line is that we're looking for a symbol that would be easily movable, easily convertible, and easily represent a value that can be created.
And divisible, of course. No, I mean,
and divisible, yeah.
It's divisible. Exactly. I think 8 digits behind the comma. So
exactly. So when Satoshi came out with this concept, he obviously, or whether it's a team or whatever, but when this white paper was produced, they already had taken a lot of these factors into consideration. So what we are looking at in terms of cryptocurrency is that it's a really sophisticated way of trading value. And until we have the electronic systems and the governments actually catch up with institutionalizing a device or a mechanism for financial and for financial systems and accounting systems, until that happens, we won't see cryptos being traded on a daily basis.
Yeah, so, I mean, the divisibility, I think, is quite crucial here, because you mentioned taxes, and I think that's really something to ponder, that government will adopt it once it can collect taxes. And I think collecting taxes on even small transactions would be very easy with smart contracts or an envelope around certain cryptocurrencies. So that you, for instance, the VAT could be deducted automatically and very quickly with every transaction, and that was not really possible before, even with e-cash or electronic cash.
Right. No, not only that. You see, with the government, the thing is, if you look at even, for instance, in the 80s when the computer industry started evolving, or the internet industry started evolving, the government took almost 20 years to catch up because they're so slow. It's just the way the nature of the beast of the government machinery.
Yeah. Or at least the outer shell of the government. No?
Right.
I mean, the bureaucrats and officials. I think, I mean, when it comes to cryptocurrency, I'm increasingly convinced that a lot of the development happened already in three-letter organizations, and then they push it out into the public, and the public grows it and experiments with it, and then basically the layer B of the government, the outer layer, has to adopt.
Exactly. And so once computers actually became mainstream and they became cheaper, because that was the other factor too, then people, and easier to use, it had to be user-friendly. So that's a hugely significant. Then we see that the government started finally implementing these computers in government. I remember in 1980s when I'd walk the corridors of the government, people were still using paper. And there was computers there, but it was mostly for writing letters, and for typing. So basically they replaced computers as electronic typewriters rather than actually using the full capability of a computer. But today, of course, there's nothing that happens in the US government without electronics now. So it takes a while for cryptocurrencies to really become part of a daily life, which it will. There's no doubt about it. It's a matter of time. And of course, there is these cycles. We'll hear a lot about the negative side of cryptocurrencies, which is losses and things like that, which happened with every currency. I mean, if you look at what happened to the stock market in the 1930s and 20s, there was a huge scam in the stock market. And then there was another major, major disaster in the stock market in 1872 or 73. Again, these are all cycles where people lost their wealth overnight.
I mean, even in 2008, I think was it the
bank crisis?
Yeah, I mean, I think it was a couple of exchanges they shut down without any warning. So the traders basically they put in stop losses, for instance, and then 1 day or 2 days later, the trading platforms opened again, and the stops were all fulfilled, but much lower because I'd actually predicted the 2008 crash. I have an email where I predicted the date on it and all that, but that was also triggered by Lehman Brothers, who really lost everything in there. But again, that originally started with the banking crisis through Iceland, of all things. There's a great movie by Matt Damon that talks about, I don't know what it's called anymore. He said The Inside Job, which really talks about the 2008 bank crisis. And it's really important to understand where cryptocurrencies actually will protect from incidences like that. So it's a question of innovation and the governments becoming really part of the cryptocurrencies before it becomes something that we trade or use on a daily basis. I think some governments, some countries where they have weaker monetary systems, like in Africa or South America or in Asia, once they start adopting cryptocurrencies in a more formal basis, then it will actually take off. That's exactly what happened with cell phones. Because the cell phone industry, the telephone industries in most of the world did not work. It worked very well in Europe and in US. So Europe and US took a while before they adopted cell phones. But if you went around the world in the 90s, and 2000, I found people using cell phones much more sophisticatedly than Americans or Europeans would. Yeah, but the irony is also that in some third world countries, so-called third world countries, this revolution happened so much faster once it started. And I remember, for instance, having a better internet connection in Tanzania than I have here, and especially on the countryside. I mean, Tanzania and sometimes even national parks, I have better internet than I have in Switzerland in some valleys in the Alps.
Valley, yeah.
And I think the same is partly true in the US, that some rural areas, they don't have very good internet connection. Yeah. So the revolution seems to pick up on the fringes sometimes.
Exactly.
Even more.
Exactly. Well, you already have a sophisticated monetary system in Europe and in North America, for instance. So it becomes really hard to change and to change a system that's already working. Yeah. But then if you look at some of the developing countries where they do not have a tax structure, they do not have a proper mechanism of collecting funds, and to add that, you have their own currencies devaluing at a horrible rate. Then you find that people and businesses and private investors immediately jumping into cryptocurrencies with their fiat currencies because you cannot rely on the central bank of that particular country. So when more and more of that happens, then there will be a transition. But the cryptocurrency is a really great, innovative, secure system to use. That doesn't mean that there won't be
scams
or scandals or things like that. That's just part of any currency. Throughout history, there's always been. I mean, when the Wells Fargo was transporting gold to New York, I mean, they had a lot of cowboy robbers.
So, but I mean, the thing is that most people are not aware of. I mean, first, speaking of developing countries, I just saw a chart yesterday about the biggest private adopters to cryptocurrency. There were a couple of countries, and I think one of the biggest was Turkey, which has a severe currency crisis at the moment. So they had the highest number of people already involved. And then there's, I think, also Venezuela and Argentina.
Right.
And then you see even governments of so-called development countries like the government of Iran and of Venezuela trying to push out their own government cryptocurrency because, of course, they are under a lot of pressure of their devaluating currencies. Yeah. And their currencies mainly devaluate also because of forex markets and financial warfare by certain rogue states whose names cannot be mentioned here. So that's, I think, one incentive, and I'm wondering if that's partly created artificially to force this development to take place on the fringes and appear on the fringes. That's one thing. The other thing is that, I mean, I really want to put the emphasis again on the fact that the biggest robber in history and the biggest murderer in history were always governments, not bank robbers or private gangs. So I think cryptocurrency so far is quite a good protection against inflation, for instance, and hyperinflation, and just government overreach on your financial assets, because of course they can track your Bitcoin to a good degree, and they can see that you're buying cryptocurrency, but they essentially cannot take it away from you, short of, I don't know, blackmailing your family or whatever. So that's a big new thing, and people in countries under pressure like Iran and Turkey realize that, and of course are adapting much quicker than people in safer.
Yeah, and that has always been the case. It's you find that criminals really, because of they were forced to innovate. They actually
they're not only criminals, but people who are under pressure from whatever reasons. No.
Yeah. So, but of course, the government criminalizes them. So whether that is correct or not, whether that's true or not, that's another factor. But the fact is, when people find a need to protect themselves one way or the other, they actually innovate. And so you find a lot of innovation actually took place because of such needs. For instance, the computer industry or the internet industry really got tremendous innovation due to the porn industry. I mean, the porn industry was really at the forefront or the cutting edge of innovating how to transmit images and pictures via internet.
Yeah, and it's still, I think,
And
70% of the internet traffic in total,
right.
or something like that, or even more.
Yeah. So because of their innovation, you and I can talk sitting in different parts of the world.
Okay.
Because they really managed to know how to squeeze it, how to use a sort of a crude system to actually make this work. And so that's what. And similarly, that's the same thing that's going to happen with the cryptocurrencies. You'll find that initially there are going to be criminals who are more active in it, or tax evaders, or people who want to hide their sources of income, which is natural. That's just human nature throughout history. So,
but I think that's not the main group of users for cryptocurrencies so far. I mean, that's what the government wants to tell you to
exactly,
to kind of channel and funnel the current development.
Yeah.
I mean, one other question is maybe: are there any solid astrological indicators that you have to separate? I think I asked you last time already somehow how to separate the two economies, basically, or the two currency systems. I mean, do you have an indicator where you could say you can basically track the development of cryptocurrencies and have certain tipping points or certain astrological events where there are major changes in this?
I can, and one of the things that's going to happen, I actually looked at this many months ago, in fact, probably even last year, but I vaguely remember one of the also really catalytic factors that tries to shift currencies is really wars. So one of the first factors that might actually help shift the current trend of cryptos would be a war, which I foresee happening in a few years, and I can tell you more about it probably in a few upcoming videos, which might start out around the Balkans. Mm-hmm. And that might be maybe 5 or 6 years from now. This is just on top of my head, but I could actually, I could pretty much nail around the year or around the time frame when some wars might take. And these wars might not only happen around Europe, but there might be different wars happening around in different parts of the world. But it will be a really turbulent time. And during that turbulent time in different parts of the world, that will play a significant role in the movement of cryptos at that time. And once that settles down, then we're looking at another phase that's coming up after that, which would be probably so if you look at maybe 2026, around that time, and I can be more accurate, on a subsequent interview that we do on this. So I can give you a long-term view of the actual shifts of the currencies in another video.
Mm-hmm. So the second phase in 2026, that would apply specifically to the cryptocurrency economy.
Yeah. So what has happened is that if you look at currencies transformation, we went from cows to coins, and coins to gold, and gold to paper, and now we are into the electronic media. So the electronic media form of currency is here to stay, obviously. The question then becomes, what medium or what symbol do we use for these transactions? So right now we have Bitcoin as an electronic symbol to create a hypothetical value or abstract value. And so this will actually become a good way to keep an accounting system, which will be with more innovation, with more changes, with more demands of adopting a system like this will take place during the wars and after the wars. So we'll have these phases basically that will actually, push cryptos to become one of the ways of exchanging value. Now, it doesn't mean that if you ask me, the question is crypto here to stay forever? And I would say no. We're just going to have different things come up. Just like at the turn of the century, when US was created, there were many, many currencies, and we all ended up settling with one. So, for instance, we're going to have a world currency, and then that might change into another symbol depending on what's happening, because everything has a life cycle. So,
Yeah.
see how that plays out.
Yeah, I'm just trying to get to one major picture and share it that many people, I think, will know already. Can you see that? I think so. That was I mean, usually you had there's rumors that The Economist is owned mostly by Rothschild group of banks and companies. And apparently every January, the first issue of the year, are posting something that's kind of a symbol for the coming development of the coming year usually. And here they had this was The Economist in 1988 January.
Oh, really?
And you have a phoenix rising out of a burning pile of paper currencies, and it bears something looking like a coin on its chest with a strange symbol on it, and it says "Get ready for a world currency," and that's quite interesting because on this coin also there is a date, and this date says 2018.
Oh wow! When was this Economist published?
Exactly 30 years ago, in 1988, January of 1988.
Oh wow! Yeah.
And so I find it quite interesting.
Yeah. So, like I said, it's usually a 30 period of development. So now we have emerged with it. So the next 30 years, we're going to see a rapid increase in cryptos and or a different financial system that will be based on, on the supply and demand of the currency itself worldwide.
Anyways, I think we're almost at the end of the interview. Yeah, let's do another interview soon maybe next week about this coming war. It would be interesting.
Yeah, so we can do part 2 of this conversation, and we'll talk about actual dates and things like that, maybe in the part 2. So.
Okay, yeah, that would be very interesting, I think, for everybody.
Yeah.
Good. So thanks a lot.
All right.
And
yeah. Well, have a good evening, and we'll talk soon.